All right. Are you serious? Are you serious? Well, we are very serious today, as joining us from Noble Gold Investment is the CEO and the main man, Colin Plume from Noble Gold Investment. Collins, great to see you again. And I know you guys have been battling the wildfires.
Yes. Yeah, it's been a very difficult. We were evacuated. Nothing happened to our home. Luckily, we have one employee, their house did burn. Unfortunately, it's just government inefficiency. They knew that this could happen there, and so it wasn't something that we. They knew there was wildfire potential there. They knew there was a lot of brush.
Yep.
So I think
the Santa Ana
that part
coming
about
out
it is
here.
that it could have been prevented.
Whoops. You know what? We've got an echo. Let me get rid of this. 1 second.
Is that?
Yeah, it's on my side.
Oh, it is. Oh, it is. Okay.
Yeah. Okay. Okay, so they know that.
Yeah, I mean, if you went hiking in any of the beautiful trails in Los Angeles, you would see brush. I mean, you would see it was, and it's been very dry. So they knew it was a situation that could happen. They had no preventative measures to cut back brush for the government. Now, if you look at the Getty Museum, which is the wealthiest, there's two Getty museums here in Los Angeles. There's one in Malibu, and there's one off the 405 freeway. That's basically, there was fires. It was in between the two fires, basically, these two museums. One was right in Malibu, did not burn because they have a preventative system in place where they cut back brush. And then their other one off the 405, that was the fire was traveling east up the mountains, south and east. And they also have a preventative measure in place where they cut back the brush. So you saw private companies that were able to navigate it. Rick Caruso, who owns some of the largest malls here in Los Angeles, he also ran for mayor. His mall in Pacific Palisades did not burn because they had private firefighters there, and they had a system in place. So it could have been prevented, unfortunately, but the reality now is you have thousands and thousands of people displaced, billions of dollars. And I always think, and I hate to say it, but it's a transfer of wealth. There's a lot of people that are not going back to those homes.
No.
They don't have the resources to wait a few years.
No.
And most of the insurance, I would say, if I had to guess, I was in the insurance business for many years before I got into real estate, the metals business. I would say 95% of those homes were underinsured.
Yeah.
And so even if you get the insurance, it's not going to cover to rebuild.
No.
So it's a government inefficiency. And it's sad because, it's one of those things I always thought you should not have all your eggs in one basket, and you should not have all your wealth in your home. And this is exactly why, because these, the governments today are not your friend. They're not looking to do anything. And I will tell you something interesting is that a few weeks before this, I met with a number of my friends that are in commercial real estate. They sell big properties here in Los Angeles. And they said, who's been the biggest buyer of commercial properties over the last 2 years? City of Los Angeles. City of Los Angeles is buying. They just bought in Woodland Hills. They bought a $400 million apartment building. They're taking our tax money and they're putting it into that they're trying to create this nanny state economy where they're in control of these big assets. And so I hate to say it, but I wouldn't be surprised if they come back in with some of these properties in these areas and say, you know what, we need low income housing and we need some homeless stuff here. We need some, and they try to pull these things back out of individuals' hands and make it government owned and run.
Yep. Well, I've been hearing that there's a couple things that one, exactly everything you just said. And so it becomes government owned and personal property goes away for a lot of people.
Right.
because they'll just get their check that maybe gives them 40% of what their house was worth.
Correct.
And then move into an apartment. And then the other thing is this, they have to do something. The 2028 Olympics is coming.
Oh, right.
Well, just buy the whole thing up and then set up Olympic Park.
Right.
And this might actually, with living apartment complexes and condos and that kind of thing. And they can say, look how beautiful it is. We rebuilt LA.
Right.
So your transfer of wealth analogy is, and these smart cities they're talking about. And before we go any further, let me put this out real fast. Folks, this is Colin Plume with us with Noble Gold Investment. And as we step into this year, 2025, one thing is clear. De-dollarization is not stopping. It's accelerating, really. And China and other BRIC nations are scared of President Trump and what he brings, and it's making them more determined to reduce their dependence on the U.S. dollar and establish themselves as a global economic superpower. Their secret weapon, gold. In fact, China has resumed buying a lot of gold, and they're underreporting it. And you want to know why? Because they recognize the global value and ability to withstand economic shocks like the fires. Gold is a global asset and with innate value. It's tangible, reliable, and it's really immune to economic manipulation. China and other BRIC countries want to be prepared. So they don't want, they're going to protect themselves with gold.
Absolutely.
And you can do the same. And I think, Colin, you've even said that if people would roll over their 401k or set up a gold or silver IRA, they can get 10 of these beautiful 1 ounce silver American Eagle coins. You'll give them 10 for free if they set it up. So guys, go to PastorPaulGold.com. Right there, you see it on the screen, PastorPaulGold.com, or call Colin at 877-646-5347. All right, Colin. So it's sad, but you just explained something very, very important, and that is you can't put all your eggs in one basket, or like you can't have all of your net worth in your home. You have to diversify, right?
And it's hard in a place like this that's so expensive because, I mean, it is for most people. For most people, it is. And there's, people are getting calls. I've already talked to people in the business. They're preying on older, elderly people. They're making cash offers. The insurance companies are already making offers. Which they should be making offers on if you have loss of use coverage. So if you need to live somewhere and you need cash, they should be paying that. But I was talking to someone that they're making offers on to rebuild homes. And I said, how could they legitimately know right now what it would cost to rebuild a home? There's no way that they could know.
No way.
There's no way that they can know because there's a lot of variables. First, the cleanup. Who's going to do the cleanup? Is it the responsible? If it's on their property, are they responsible cleaning up all that ash, or is the government going to come in and do that? I don't know. I don't know the answer to this question. I got to tell you that construction costs are going to go crazy. They're going to go absolutely gangbusters because there's not going to be enough people to do that work. I think you and I have talked about this a lot. The construction industry is really interesting because for every 7 people that get out of the construction business, only 1 person goes into that business. It's not a business where people that actually know how to do the work are going into. They're getting out. They're retiring. And a lot of it is just it's a difficult business that there's a lot of red tape. There's the getting permits and it just became a bit. There's lawsuits. It just became a business that people don't want to be in. So there's a lot more people. 7 times more people are leaving than getting in. So now you add that, and there's thousands of homes and thousands of structures that need to be rebuilt. And obviously, everybody wants to get back as soon as possible. Well, if you want to get back sooner, what are they going to do? They're going to charge you a premium, right? They're going to charge you more to get back and rebuild. And so, these insurance companies are trying to make quick deals with people to get money out, but I don't think they really know what it's going to cost to legitimately rebuild a home until the government really comes in and tells us what they're going to be responsible for. We also don't know when they can start the construction, right? We don't know when that'll happen. They said they're going to try to ease up the permits, which in this state is one of the worst. It's one of the slowest areas to build. They make it very difficult. So there's a lot of these things happening. Overall, I think, assets, these kind of assets, anybody that should hang on, as best as they can, because unless you're an older person and you're like, forget it, I don't want to deal with it, you sell. But anybody that can, you need assets in this world. And these homes eventually, these communities will be rebuilt, and they will be very valuable. And it's just you got to hold out. And that's really the thing about real estate that I've said for many years, but I think in the last 3 or 4 years, Pastor Paul, has really become important, is that it's gotten really hard in real estate. Even before this fire, there's been a definite pullback in the growth of that space with higher interest rates. And real estate is a game that you have to be able to play the long game. And if you can't, it's not the game that you should be in, because people today are going to lose. They're going to end up selling and they're going to lose. And eventually, some of these houses that are worth $1 million are going to be worth $2-3 million, because just the cost. If you imagine the land's already valuable, it's a beautiful place to live. Then you figure, let's say construction costs go up 30-40%. Well, someone new into that market's going to have to pay that new price to rebuild, right? So they're going to pay a higher price per square foot. So everything is going to go up. So I think it's something to keep in mind, but not to dive down that rabbit hole too much. But it is a really unique situation in that I do think there is a wealth. There's a lot of wealth that could be made, and there's a lot of wealth that unfortunately will be lost if you don't have reserves in place to sustain
some way to hang on and hold out and wait it out.
Yeah.
Well, let's talk about a couple things here. The Federal Reserves that are sinking, and what does that mean? And also, I want to ask you about tariffs on Canada. So
the reserves are shrinking because we've tightened up. The Fed has really tightened up over the last few years, and they've tried to get some of that money under control, and so they've been really restrictive on letting money out there. And I think the Trump bump that we're going to see, a part of it is going to be a loosening of money. There's no way around it. They have to loosen up money.
But isn't there going to be a fight here? Because Jerome Powell seems like he won't lower. He hasn't lowered interest rates yet. They're still tightening. They're still destroying cash on the side. Do you think
last year they lowered rates 100 basis points. But some people say they should have been more aggressive in that. You're right. Powell has said that he's being more cautious because he doesn't want inflation's still moving up. It hasn't dropped.
Yeah, I know.
It's at 2.75, 2.7 in the last report. But if the 30-year mortgage is at 7, which it's at right now, obviously you can get probably a little bit better, but let's just say 7's the number. And you want to stimulate the real estate market, and you have billions of dollars in commercial real estate coming due this year. If Trump wants to stimulate the economy, he's going to need to get more money flowing. So maybe he enacts some kind of emergency measure, or they do what they did in 2008, 2009, which I've been saying is that I think they do quantitative easing. I think they open up the money supply, because banks right now are being very cautious. Banks are not lending money. It's not easy right now. Even, with people with reserves established, it's very difficult to get a new mortgage today. And they're being just picked. They're just going to take the top A credit, top A, opportunities. Well, that's not how your economy is going to grow. They have to take some chances. They got to be able to lend money to businesses. So, I think they're going to have to open up the money supply, and they're going to have to do some quantitative easing. And I think they'll say that it's an emergency measure to do it. And I've said, I think 2% inflation is unrealistic. I don't think they're going back there. My gut is that 3%, it becomes the new norm. I think that's going to be the new number, so that they can argue that they can open up the money supply. And you've seen it where you live. We had that massive boom, right?
Yeah.
and then it tapered off.
Tapered off.
It absolutely tapered off.
Property values dropped about 20%, maybe 15%.
Right.
Interest rate, because interest rates went up, and then people couldn't sell their homes back up in the northern part. So let me ask you, if they went to quantitative easing and lowered interest rates, would we have runaway inflation, or would we'd have a little higher inflation, wouldn't we? But maybe that's okay. And maybe they're going to put it in this next spending bill, this next budget. I mean,
I think it comes down to what, and I've been saying this a lot, but I think Trump's philosophy is high growth, high inflation. I think that's going to be his philosophy this year. If you think about a business owner like Trump, spend money to make money, right?
Yep.
What other president is thinking about acquiring Greenland?
I love that. Well, yeah, and you look at the natural resources. I mean, there's a ton of oil and gold, and gold too. Oil, gas, coal, and gold. I mean, he wants to buy this because the money that could flow out of that to help the American economy would be incredible, wouldn't it?
Yeah,
he thinks big.
Yeah, spend money to make money, right? So spend money to make money is our debt's going up more, but hopefully the cost of our goods long term would be cheaper. But in the short term, if he lays the gauntlet down on some of these tariffs, the cost of goods are going to go up.
Definitely.
So it is, and the dollar's been surprisingly strong. The dollar's been very strong relative. It's always fiat to fiat, right? Whenever I say the dollar's strong, they're like, "Oh, but you're telling me not to buy gold." I'm like, "No, fiat to fiat, which means our paper money to their paper money." Yeah, we're looking good in the world because other economies are doing equally as bad or if not worse. So there's a flight to security here in the US. And so it's called the milkshake theory too. They talk about how there's a flight to the US and that's boosting the value of the dollar, which in some ways the dollar getting really strong hurts us too for trade, right? It makes it more expensive. Yeah. But I think they're going to have to lower rates because of all the things that I mentioned on the real estate and all that. But also we borrow our own money too. And so do we want to borrow at a higher rate? Also, we want our rates to go down so it's cheaper for us too to borrow against ourselves. So there's a multitude of reasons why I think that rates will come down, but I think money sort of opens up this year. And I think that will be good for entrepreneurs and business owners. But it's going to shake up a lot of our traditional norms, like the GDP. How much of the GDP is our internal spending and hiring and like growth within the government? 30%, 35%?
It is way too much.
So if we cut all those jobs, we pull all back, he's already, the measures he's put, they're going to hold back on spending. They're going to do all this stuff. You fire all these people, you cut back a lot of our own GDP that we're internally spending, our GDP growth will go down. It will.
He fired 1,000 people today that were Biden presidential appointees for all these little, they were sitting on boards and this and that.
Yeah.
1,000 people just one day. And he's looking at the overall government. He's going to have Elon Musk in there. And you know how he'll do. They'll start trimming this thing up. They're really trying to restructure America, I think. And in the long run, maybe that's what we need. Ronald Reagan said that. The problem with government is the government. Okay, it's too big. But like you said, in the short term, there's going to be immediate vacuum in the GDP.
What about unemployment? Unemployment should go up.
Yeah, it's going to go up.
Should go up. So how does the stock market react to that? So I think if all of these things moved in the next 6 months, GDP goes down, stock market unemployment goes up, but maybe the numbers aren't reported yet. But the amount of people he's talking about laying off means unemployment will go up. Now, are these great jobs? Do these jobs help us? Probably not. But I'm just telling, the numbers are should show unemployment going up and GDP going down, which could send a shock to the stock market. That's really an effect. That would be a normal effect.
The only hope we got, I think, in one degree would be this. we may see a surge in military enrollment. And then that would put we'd have more military people on payroll, which they're getting paid less than these people that have been sitting in the government.
The middle management jobs, is that what you're saying? Yeah, no, I agree with you. And so, but it's all cause and effect, right? And that's the exciting thing. All of these things I'm in support of. I just, as a person that looks at the numbers and has to look at finances and, makes financial bets.
It's a gamble.
You're looking at a gamble and what's gonna come out of these gambles, right? That's the big question that I think nobody really knows the answer to. But I do think that, central banks sent a really big message last year that they're going to buy a lot of gold. They're going to continue to buy a lot of gold, and it's always going to be the safest bet in high inflation environments. And I think we're going to go back into that. Do we go back to 8-9%? I don't think so. God, I hope not. I hope we don't go back there.
That'll kill it. Stagnate us.
Yeah. We don't want stagflation. We don't want that either. I think we have to look at what's realistic. So these measures are things that we've never tried, and they are gonna have a dramatic effect on our dollar. They're going to have a dramatic effect on our day-to-day cost of goods. These are all things that we need to be looking at. And also, he's been able to get a number of things done, but there's going to be pushback. There's going to be pushback from the government. Right. They're not going to like a lot of the things that he's doing. So I don't know if it's always going to be as easy as what we say. Some of these executive measures that he's putting in, he has control over, and then there's going to be a lot of things he's going to have to go through Congress.
Right.
And I don't know how much Congress is going to allow him to do the things that he wants.
It'll be a dance. Now, last month when you were here, gold was around $2,600 an ounce. Okay. Today it's $2,758 or something like that. Okay. I mean, that's $100 jump in a month.
Yeah.
You said gold's going to 3,000.
Yeah. Oh yeah.
Or maybe beyond.
Yeah. Probably. I would say probably second quarter this year we'll touch it. I think that there's still tremendous buying and holding. The retail market is still not as aggressive as you would think into gold.
I thought it would do better by now. Yeah.
It's mostly institutional buying and central bank buying. It's still the majority, but the U.S. retail market is still catching up. And I think, listen, with the new administration, there's a lot of optimism about what can be done. But at the end of the day, we're $37 trillion in debt. It translates to, 300,000 plus per person. We're not digging our way out of that hole quickly.
No.
It's just not a situation that we can do. So, the globe is looking at us. They're trying to see what we're going to do, how we're going to react. And then the investment market is looking at opportunities.
Yep.
I saw Nancy Pelosi did a call. I know they're talking about not allowing people in government to buy stocks and do a call option, but she bet heavy on some tech stocks today. I saw that come out.
Ah, did she?
Yeah, and last year the Congress outperformed the stock market by almost 8%. Just if you take cumulative effects. So, you have this idea of the government, these government jobs, and they're trying to do what's right and all these things. And at the end of the day, it's pensions, pay for life, and inside information. Those are the three things that really come out of these.
I'm trying to remember which stock it was that. Meta. Just before they voted, they were getting ready to vote that TikTok needs to be banned. Almost 75% of the members of Congress bought a ton of money into Meta. Okay, so that when the ban came, Meta, everybody was jumping to Meta and different things.
Sure,
stock went up, and these guys made a lot of money.
Oh, okay? They made a lot, absolutely.
So you really just have to watch them. If Nancy's buying stuff, you probably should just buy whatever she's buying because they know what's coming.
Yeah, exactly.
They know what's coming.
Yeah. It'll be interesting to see who buys TikTok. I mean, I get it I heard the number 20 billion. I've heard more than that, but
can Kevin O'Leary do it? I mean, is he putting a team together?
I think he could put the money together. Sure. I mean, I've heard that 20 billion is a really low number.
Yeah.
But the thing that's not included in the deal is the algorithm. It's just
that's what makes it.
So it makes it addicting.
No pun intended, but
yeah. That's what makes it tick. That's exactly right. Yeah. So you're just buying the people, right? The data, right. Which I think a lot of people have that data. If you don't buy it. So I don't. It'll be interesting to see what they're going to get out of it. The algorithm is the thing that makes it so, and the TikTok shop. The way that they've really taken the market by storm. With the algorithm coupled with they've made it really easy to buy on their platform. Those are the things that you really want. But yeah, I mean, you get a lot of eyeballs, you get a lot of data. So yeah, I don't know if he'll end up being the ultimate buyer, but how do we guarantee that the Chinese government is not going to have eyeballs still in that data? That's the part I don't really understand.
I mean, they have to. Whoever buys it has to sever the ties to the guy in Singapore and really the Chinese government.
Yeah.
And what do you get when you get rid of the algorithm? What do you really have? I mean, are you going to be like Elon? Basically, I think Elon Musk spent $54 billion for TikTok. I mean, for X. And then he's like, "Whoa, I like overpaid by 20 billion here," but he's managed to turn it back around and make it profitable because that's kind of how he is. But it's a gamble. $20 billion. I don't mean that's a lot of money. Even
I mean, if you look at what other Instagram and other ones have traded for relative to how many users they had, it's probably not an unrealistic price,
right?
But I think. Ultimately, a lot of these platforms are, they're doing a lot of the same things, right? They're all sort of copying each other. But yeah, in terms of like what's happening out there, Pastor Paul, just, obviously, I don't know if we talk too much, but my book, just before I get off here, I know my book's
I'm so glad you brought it out. Yes.
Yeah. Silver is the new oil. So you can check that out on our website. I talk a lot about AI and the revolution and the super cycle. I was talking earlier to somebody about really what's in this book. And I think it's really the idea that is really unique and different that I dive into a lot is this super cycle of assets. I really think we're in this, and that's why when I was talking about real estate and these things, like it's really about lasting power and being diversified and knowing these opportunities. But the race to energy is happening, and whoever controls energy going forward will control the world. And I do believe silver is a small part of that. Is owning silver and all the industrial uses that it has, from all the EV energy to cell phones, everything that it's doing. There's a lot of energy being put in these metals. And you look at today they were talking about Saudi Arabia. Saudi Arabia is spending a fortune, billions and billions of dollars on essential metals all over the world. They're buying mines, they're acquiring assets. So the two things they're really focused on is they know that oil is going to peak at some point, whether it's 2030 or 2032. We're eventually we're on the downside of oil, right? That eventually it's going to peak out. And so they're really focused their energy on diversifying their holdings from, the one thing that's made them so wealthy into other areas and essential minerals and metals. And then obviously they're building this hospitality, right? They're trying to become a destination to get people there. And it's partly to get people there to spend money, but it's partly their idea is getting entrepreneurs there that can create IP and assets under their borders to help them grow.
So Colin, you've been on this a long time. His brand new book, folks, is Silver is the New Oil. It's at Amazon.com. Well, it's probably everywhere it sells. It's certainly Amazon. I'm waiting on my copy to get here. I can't wait because I've heard you talk about silver and the long term with solar panels and the use of silver in everything. And the demand is going to create the rise of the price of silver. Oh, it
Correct.
just has to.
Absolutely.
And silver's the new oil.
Yeah. And it parallels with where the new economy is going, right? It parallels, first of all, the government in terms of defense. They won't even release how much silver they use in their missiles, in their airplanes, they will not release it. I tried to find it. I researched. They won't even tell you. And I get it. They want to keep that under wraps. They don't want people to know. But that's just one of 1,000 places that need silver. But our U.S. military uses a lot of it. There's reports of in some of these missiles, it's an ounce to 5 ounces. Who knows exactly how much, but they're using it. They're going to continue to use it. There's all these electrical devices that we use, all the medical devices. I mean, there's silver, the nanoparticles that we use in medical. So the list just goes on and on. So I think the thing that I dive into really in the book that I get really specific on is, here's silver today. Here's where oil was, 100, in the late 1800s when Colonel Drake found oil and was able to pull oil out of the ground and created this massive amount of wealth that was controlled. The wealth was really in the hands of a few, right? The Gettys and these people. And, I make the argument that and I think that opportunity is here again. The market's pretty small in silver. So people, there's been people like the Hunt brothers try to control the market and never been able to. So, it's an exciting time. And then at the end of the book, I give some alternative investment tips, things that have worked in my career, things that, I really focus on and, really dive into the idea that you have to really think creatively. And also it's really, the world today is an asset economy. Everything is controlling assets.
There you go. Yep.
Businesses to real estate, to metals, to whatever it is, you need to control assets that provide income and can grow over time. And that's really the best way to protect your wealth and your family's wealth going forward. And that's really what I've done. I own, 5 businesses, lots of precious metals. I own, different real estate. I have a lot of diversification. And so I'm protected. And that's why, with this real estate downturn, a lot of people were hurt and I was able to survive, because I had different things going on. So you really have to be diversified and you have to have money liquid for opportunities. And that's why precious metals are great, because as opportunities arise, if gold goes up a lot and you got a business opportunity, you can sell some and buy the gold. You can do different things. Whereas if you're stuck in assets, so much money in one thing, you need cash and the time isn't great. Like right now in real estate, you're stuck. What are you going to do? You're going to sell your properties at a 40%, 50%.
You don't want to do that.
You don't want to do that. Right. Yeah. So being diversified is really key. And I dive into a lot of that in the book. So it does talk about silver, the opportunity, but it's more of a way to build some wealth.
You give people a broader sense, a broader business strategy.
Correct.
To have at least 5 streams of income kind of thing. And that's why you diversify with different businesses. And
correct.
Generally out of your 5 businesses, I would say 3 to 4 of them are doing at all times doing pretty well. Maybe even sometimes all 5, but would you say 3 to 4 doing real well at any given time? Does it change on you?
They're all doing pretty well, actually.
And you're good. You're really good.
But I think a lot of it is I've built businesses before, but also is staying power, is really staying power. Like every business I always tell people when they start, it takes 3 years minimum.
Yeah. To even get it up.
If you make any money before 3 years, it's luck. It's but it's not the norm. And I would say that you could make money year 2 and you may lose money year 3. It's definitely, and I wouldn't be discouraged if that happened. Like that would be more normal than abnormal. I also think you have to provide tremendous value today. You cannot sit back and just think that you have a great product or that it's going to I had somebody at dinner at Entrepreneur come up to me and said this. He was making all these bold claims. He's got this golf app, and I was so turned off by these numbers that he was saying, because realistically, it doesn't matter if your product's that good. If nobody knows where it is or the clients don't love it, if they're not obsessed about it, it doesn't matter. It's got to have something so tremendous. You have to provide tremendous value, and you have to be able to market it in a way to get in front of people. And if you can't do those things, it doesn't matter. I always talk about, you probably will resonate with this. Do you remember like VHS and Beta back in the day?
Oh, yes, I do.
And these two systems were, Beta was better, right?
Yeah.
Wasn't Beta better? It was the better system.
Better technology.
Better technology, better sound, better quality. What happened to Beta?
They died, went out of business. Man. It died because they didn't know how to market. They didn't know how to market it.
Exactly right. So it doesn't really matter. So I think the thing that I always realize is that I can have the best people. The business that I have are good products. They're valuable products. But if you're not offering incredible customer service and incredible value and you can't market it, you have to be able to do those things. And I think, but yeah, you go through those waves and fluctuations. But being diversified, some are going to do better, some are going to do worse.
Yep.
And at the end of the day, I've done all of this to protect my family from, ups and downs. And that's really the most important. And I think that's what everybody's trying to do, is just protect their family. And also you want to be able to retire in the same quality of life as you're living when you're working. Right. And I think the only way to do that is to have assets. There's just no other way about it. And no offense to the stock markets, I do own stocks and different things, but I do not feel comfortable with anybody that has all their money in the stock market. I just think it's too much of a roller coaster ride, and it's too easy to make mistakes. And you got to look at, and you don't own those companies. You're not in
control. You're not in control.
Exactly. You're one of a million people. So if you like things that you can control, that you own, this is a good asset to own it, control it, and you can be the boss, right? You're in charge of this, and I think people like that, and it resonates with them.
Yeah, Colin, this is pretty good stuff, I'm telling you, and I appreciate you bringing up this concept of silver is the new oil. But I'm glad you brought up today about the Fed and quantitative tightening that's going on. How does Trump? What does he do? I mean, I'd like to be a fly on the wall, wouldn't you? With Trump,
oh my God, I would pay so much money to be in the room on those decisions.
When there's like 10 of these economic minds are in there, and they're all throwing out what they're in, and he's just sitting there. I would love to be a fly on the wall, because he asks some very intelligent questions to each one.
Yeah,
people prod them and then say, "What do you think?" And it'd be interesting. It really would be a lot of fun.
I think what's interesting is that I think the unique thing about him is that his ability to connect with younger people. I think he talked about that in the inauguration, that his son was like, "You got to go on Joe Rogan, and you got to go on this podcast." I saw a lot of interviews with him after, and they were the people that interviewed were really impressed of how present and also how willing he was to listen to them.
Yeah.
And you could tell, like, he's the kind of person that he's always trying to take in information and make determinations. And for a person that's, close to 80 years old, that's, and all the expertise and all the money he's made and all the businesses, the fact that he's still open-minded gives me a lot of confidence, hopefully going forward that we're going to move this economy and move things going in a much better direction. It's just a lot of bumpy roads, and it's going to cost us a lot. And ultimately, I think that, can he shake up this machine that we've created, and these politicians that are so ingrained, and they have such cush jobs, like they're going to fight it tooth and nail, right?
Yeah, that's why there's no term limits. That's why they have no term limits. They don't want to leave. They come in and they leave worth 20, maybe 30, maybe $100 million. Who knows? They come in, with without a nickel. It's incredible, but the wealth for these people that make typically $120,000 to $180,000 a year, and how they all come out worth $50 to $250 million. I mean,
I don't know how that math works, but I've never seen that. I know a lot of people have made $150,000 a year. They're not coming out 10 years later worth $150 million.
No, they're not.
So it's called insider tips, right? So,
big time.
Yeah.
Well, Colin, I appreciate it. We're off to a good start. 2024 is gone. Thank God for it. Boy, the fires, we're really praying for all of you. Like you said, one of your employees lost a home, others been displaced. God, thank you that the Lord has blessed you and is protecting your home
Thank you,
and
Pastor
your
Paul.
business. And we will continue to pray for you and pray for your companies and all of your employees.
Thank you,
Truly
sir.
do. And
Thank you.
pray for everyone out there.
Same to you.
God bless you. Thanks a lot.
Thank you. Talk to you
And
soon.
folks, that's Colin Plume. And please go, just check it out. Go to PastorPaulGold.com, or tomorrow pick up the phone and call them at 877-646-5347. Get some advice. They don't pressure you. They help you figure out where you're going with your financial timeline, where you're at in your life, and they'll help you with it. So I think it's really great. God bless you, and God bless you, Colin.
Thank you. Thank you, Pastor Paul. Same to you.
All right, folks, we'll talk to you again right here on The Coming Apocalypse.